But thank you very much. But thank you very much for joining. I think because of time, other participants will just, if there are other participants who are joining, they will get us as we are progressing, because I'm seeing that we have quite a good number of participants. So my name is Charlene Wawira. I am a data protection officer in Kenya, and I will be your moderator for the day. And at this juncture, I think I will let our panelists introduce themselves, and then we can proceed.
Yes, good afternoon, everyone. Sorry, there could be some background noise. My name is Edwin Urasa. I'm a country manager at Credit Info Tanzania. Credit Info is a credit reference bureau established in Tanzania since 2013. So we are more like 12 years right now in terms of our business operation. Our role as a credit reference bureau is to collect and process and, of course, disseminate credit-related information. We are working with banks together, as well as other financial service providers like microfinance, SACCOs, and anyone who's engaging in any form of credit facilitation. We are regulated by the central bank, but also Credit Info is a global company headquartered in London. We operate currently in more than 50 countries, predominantly, I would say, Africa, more than 30 countries, I think, in Africa right now, including Kenya and Uganda, and some other southern part and West African countries as well. So good to be here, and I'm looking forward to the conversation. Thank you.
Thank you very much, Edwin. Louisa?
Good afternoon, everyone. My name is Louisa Matumurithi. I'm a former group data privacy manager at Equity Group, including subsidiaries like Tanzania, and I am currently one of the group data protection, or part of the data protection team supporting regulatory compliance. I'm also a part of the leadership team in the Kenya Privacy Professionals Association, but I won't harp on about that because this is a DPGSK webinar. And I also serve as a secretary for the Kenya Bankers Association Data Privacy Working Group, amongst other titles or leadership hats that I wear. I'm happy to be one of the panelists today. I welcome everyone and karibuni.
All right. Thank you very much, Louisa and Edwin, for that very good introduction, panelists. I'm sure you can agree with me that we have a wealth of, we will have a wealth of information from our panelists. And because our goal today is just to unpack the challenges, the opportunities, the practical solutions around cross-border data transfer in the financial sector, especially where Tanzania and Kenya intersect, and also to reflect on what this means for the wider East African region. So at this juncture, I'd like to mention that this session is jointly being hosted by the Tanzania Privacy Professionals Association, TPPA, and the Data Privacy and Governance Society of Kenya, DPGSK. All right, just a bit of housekeeping. Please keep your mics muted. You can type in your question in the chat box if you have any question, so that we can have a seamless discussion. And also, the opinions that are being shared by our panelists, please note that they are their own opinions, and they do not necessarily reflect the official position of TTPA and DPGSK or the organizations that they represent, because this session is only for informational and educational and interactive purposes only. And we also will be recording this session. We might share this session with members who may miss it, purposely, rather purely for learning purposes. All right. So to set the stage, maybe we could just start by defining what we mean by cross-border data transfer. Might sound a bit technical for some of our for some of our participants. So maybe we can just have a feel or have a clear definition of what exactly we are talking about by defining what cross-border data transfer is, and especially in the heart of modern financial services.
All right. Thank you very much for the question, Charlene. And I want to echo Mugambi's comment in the chat. Please join the PGSK. Become a member, whether you're in Kenya or Tanzania or even in the diaspora. Please become a member. That's would help. So in terms of cross-border data transfer, it is defined as the transfer of personal data across borders simply, but that would also include the storage of this data on cloud, especially if the cloud is not hosted in the country or the resident country. For example, if you are transferring personal data or sensitive personal data from Kenya to Tanzania. Now, our Kenya Data Protection Act, shortened as the KDPA, an acronym I'll be using a lot today, actually defines it as cross-border data transfer, but the Tanzanian Data Protection Act, known as the PDPA, so it's a Personal Data Protection Act that was passed in 2022 but came into effect on the 1st of May of 2023, actually refers to it as trans-border flow. So the PDPA in Tanzania describes trans-border flow as international cross-border flows of personal data, as I mentioned before, by electronic transmission or other means. Electronic transmission is not defined in the Act, so you could look to what electronic transmission would mean. But as I said before, that would include storage in the cloud. So if you have your data in a primary or secondary server, then it would be important for you in terms of Kenya Data Protection, the Kenya Data Protection Act, for you to host that data in a country that has commensurate, which means the same, or better data protection laws than Kenya does. That you can find in one of the sections in the Kenya Data Protection Act. I won't bore you with the section numbers. And then the Tanzanian Data Protection Act actually calls for the same thing, but they word it a little differently. So they don't exactly use the word commensurate. They say adequate data protection, and then you can add laws at the end. And then the Tanzania Data Protection Act also describes the country where you're sending the data to or transferring the data to as a recipient. And they define a recipient as a natural or legal person, public body, or any other person who receives personal data from a data controller. Now, a recipient is a unique term in the Tanzanian Data Protection Act or the PDPA. The word recipient is not used in the Kenya Data Protection Act or the KDPA. So that's one of the differences. Then in terms of this personal data, when we speak about the Personal Data Protection Act or the PDPA, it says the instances where you would need to transfer this data if it's necessary for the performance of a task, or if it's carried out in the public interest, pursuant to the legal functions of a data controller that establishes the necessity of then transferring this data. And also there's no reason to assume that a data subject, they use legitimate interest, but I won't use legitimate interest because legitimate interest is mostly used for companies. So let's just say data subject interests might be prejudiced by the transfer or the processing in the recipient's country. And then they also add on 3 more requirements. They say the data controller has to make a provisional evaluation of the necessity of the transfer of the personal data. And also the recipient has to ensure that the necessity of the transfer of the personal data can be subsequently verified, and that the data controller should also ensure that the recipient processes the personal data for the purposes it was transferred for, and that's in line with the purpose limitation principle. So that's one of the data protection principles that both the Kenya Data Protection Act, so the KDPA, and the Tanzania Data Protection Act, the PDPA, also refer to. Something else that I found interesting in Tanzanian Act is they talk about the adequacy of the level of the protection afforded by the recipient will be assessed in light of a number of things. So there are 6, and I'll mention them quickly. The first one is all circumstances surrounding the relevant personal data transfer. The second one is the nature of the personal data transfer. The third one is the purpose and duration that was hinted at earlier. The fourth is the recipient's country. The fifth is the relevant laws in force. And the last one, or the 6th one, is professional rules and security measures which are complied with in that recipient's country. And that goes into a lot of detail because the Kenya Data Protection Act calls for you to have adequate technical and organizational safeguards in place, which we know is a standard data protection instance, let's say, or requirement for you to transfer personal data cross-border. Some of you may or may not know that Tanzania calls for data to be localized, so the servers should ideally be in Tanzania. And if you would like to transfer data cross-border in Tanzania, it's an interesting process. So you apply to their commission, known as the PDPC, so the Personal Data Protection Commission in Tanzania, and you detail why you want to transfer the data, which country you're transferring to the recipient. And then you have to get a permit from the PDPC. One of the other requirements is that you also have to write a letter and then wait for the approval. If you want to transfer data for a specific data subject to a particular country, there's a particular form you have to fill that's uploaded onto the PDPC portal. And you have to, let's use the word, seek the consent of the specific data subject to then transfer that personal data to the recipient country. You have to state the purpose. And then you also have to ensure that the adequate technical and organizational measures are taken into place. That's very different for cross-border data transfer in Kenya. In some instances, you would need consent of the data subject, but you could also argue that you may not necessarily need consent if you're relying on another legal basis, unless consent then is specifically requested for as one of the legal requirements, which it is in some instances, especially for sensitive personal data. Thanks, Charlene.
Wow, thank you very much, Louisa, for that very, very comprehensive definition of cross-border data transfer, and also the differences in the various differences and similarities in the Kenya Data Protection Act and the Data Protection Act in Tanzania. That was a very comprehensive definition and differences and similarities. Thank you very much. So maybe I'd ask Edwin that based on this definition of cross-border data transfer, how does it play out in the financial sectors, for example, banking and insurance, or how does the cross-border data transfer? What is the applicability of cross-border data transfer within the different jurisdictions, that mean Kenya and Tanzania? It's a two-part question. You can answer either or both of them if you're comfortable. Edwin. Edwin? Okay. Louisa, would you like to take that one up?
Yes, I would. Charlene, maybe you can just kindly repeat the question. I think Edwin may have dropped off the call.
All right. So the question was, how does cross-border data transfer play out in the financial sector? And also, how does its applicability merge within the different jurisdictions? So it's just the two questions are just related, just that I'm just trying to expound it a bit more. The applicability of data cross-border data transfer within the different jurisdictions and how it plays out in the financial sector, for example, banking, insurance. Yeah.
All right. Thank you very much for the question, Charlene. So it plays a part, especially for organizations, including the one that I work for, that is multi-jurisdictional or cross-territorial. So you have the parent company in one particular jurisdiction, one particular territory, that then by default is transferring data cross-border, whether it's for analytics or for other purposes. So the first thing you have to ensure is to have Chinese walls between the different jurisdictions. And then also, because data protection laws are territorial or jurisdictional, sometimes there are nuances between the different laws, like I pointed out in the other answer to your first question. So you have to ensure that you comply with both legislations, for example, in Kenya and Tanzania, and also if there's anything that the particular regulatory authorities have also put into play. There are also central banks as well, because banking is a very highly regulated industry, and insurance as well. So for example, if you are transferring data between Tanzania and Kenya, you'd have to comply with the Central Bank of Kenya and also the Tanzanian Central Bank's regulation. Whether that calls for localization in Tanzania or not, then you'd have to make sure that that's done. Also, you'd have to ensure that in instances where you'd need consent from the data subjects, or in instances where you need a permit or approval, like in Tanzania from their regulator, that you tick those boxes. It's easier to do that at the beginning. So for example, if a data subject is your customer and they're opening an account, rather tick off the consent at the beginning so that you don't have to keep going back and asking the data subject to consent for different things. So include the cross-border data transfer consent, or the, as the Tanzanians refer to it, the trans-border flow consent. And then also detail that you're going to have the adequate technical and organizational measures in place. At times also you have to file joint reports, for example, maybe financials, etc., that would require that transfer of cross-border personal data or trans-border flow. Try as much as possible to try and depersonalize the data. So what that means is remove the personal information in it. So anonymize it or pseudonymize it, whether the data is at rest, so sitting, or the data is in transit. So it's actually moving from one country to the other. And then that makes your life a lot easier, because then if it's not personal data, it's depersonalized, as they say, then you'd have to comply now with the other regulations, and it makes your data protection work a lot easier. Banks have an extra hurdle to jump, as I said before, one of the most heavily regulated industries, and also one of the industries that has a big eye on it. So you have to ensure that you tick all the, don't just do a checkbox exercise. Ensure that if you're dealing with personal data, you have crossed all your X and O's, and that you're moving in line with that. Also, you have things such as digital banking or mobile banking. For example, if your data subjects are in a different country or jurisdiction, if they're resident in the EU, then the GDPR may apply. Or for example, if you're Kenyan or Tanzanian, whatever the lovely nationality you are, but you haven't happened to be in a country that is part of GDPR, then GDPR applies to you whilst you're in the country. And that's a nuance that a lot of people are not aware of. So ensure that wherever your data subjects are, that all the data protection provisions are that you comply with them. And then, for example, if you have policies, make sure those cut across board. Something else that also needs to be checked off is a legal requirement. So you need to have a data processing agreement in place or a data sharing agreement in place. The difference is if one of the parties is a data controller and another party is a data processor, then you sign a data processing agreement. If both parties are data controllers or joint controllers, then you sign a data sharing agreement. Those are very helpful, and also legal requirements both in Kenya and Tanzania for cross-border data transfer or trans-border flow. And then also there's something that you can explore called corporate binding rules, but we'll get those to those later. Let me not preempt the question. Thanks.
All right. Thank you very much, Louisa. Actually, you've preempted even the next question that I was about to ask, but it's all good, it's all good. I'd like to acknowledge the participants in the chat. Dr. Lebuta has told us what the Data Privacy and Governance Society of Kenya is. And also Josephina has told us about TPPA. Participants, if you can just brush through the chat area and see that, so that I don't waste so much time on it. And there's also a question from Lee Opez. Lee, I'm going to get to your question in a few when we do the Q&A bit. All right. I don't know if Edwin is back on the call. Edwin, if you can hear me. All right, maybe just give him some time to come back. But Louisa, I think now it's just you. So you've mentioned about the legal obligations of data controllers and processors before transferring data across board. So what are the obligations during and after the cross-border data transfer, especially in the financial sector? You've taken us through what should happen, get consent from the data subjects, have your policies in place, comply with the regulations, the data protection rules and regulations in both jurisdictions. So what happens during and after? What are the legal obligations of data controllers and processors during and after the cross-border transfer?
Okay, thanks for your question, Charlene. So I had sort of touched on the answer when I gave the response to the first question. So you definitely have to have the appropriate technical and organizational safeguards in place. That's data protection and privacy wise, but also compliance wise. That may mean that it's interdepartmental as well. So you'll have to liaise with your information security or InfoSec or cybersecurity team as well, especially if it involves storage on the cloud, or if you're using any of the applications on the cloud for this cross-border data transfer or the trans-border flow, as it's referred to in Tanzania. And then in Kenya, there is an interesting legal obligation that states that these appropriate technical and organizational safeguards then have to be done with respect to the security and protection of the personal data. And then you have to have proof or issue proof to the data commissioner. So in Kenya, it would be the ODPC, and in Tanzania, it would be the PDPC, the Personal Data Protection Commission, and ODPC's Office of the Data Protection Commissioner, of these appropriate safeguards, including jurisdictions with commensurate data protection laws. Also, if you are transferring data and the other party is the data processor, the ODPC usually requires you to have a certificate to show that that data processor has been registered with them. I would suppose that the Tanzanian PDPC also has the same requirement. So, for example, you can't be interacting with a data controller and a data processor if they're not registered, because then they're not meeting the minimum legal obligation in either of the countries. Another thing you may have to do is file what's called a DPIA, or a data protection impact assessment. That's usually, there's a template, a regulatory template, both in Kenya and Tanzania. I was informed by my Tanzanian colleague from Equity that the commission has released a new template for a DPIA. So that's usually done when the transfer of this personal data would then be deemed as high risk to a data subject. So that could be from a system or a process or a new product that the bank would then want to launch. And that's important. Here in Kenya, you have to file the DPIA 60 days before processing or going live, and business usually don't like that, but it has to be done. And then you have to get an approval from the ODPC, which is titled, the DPIA usually has no objection. Sometimes they come back with questions that you have to respond to. Filling out a DPIA is not an easy task for those of you who've done it on the call. You have to get input from the business, input from management, and then input from the vendor, if it's vendor-based. In addition to you ensuring that they're registered ETC. They have different timelines. So the regulatory timelines for you filing and for the data commissioner responding to you are different. For example, in Tanzania, you have to file 7 days, and the regulator is, and well, by law, they have to get back to you within 7 days. If the transfer of the data is deemed high risk, that's after you've gotten the permits, etc. But then now they have a hard stop of 30 days by regulation to get back to you. So you haven't received any questions from them, we haven't received any response from them, then you can go ahead. Here in Kenya, the response time from the regulator is a bit longer. And so there's a difference. So if for example, you are involved in a project, or your bank was involved in a project that's multi-jurisdictional, you have to keep those different DPIA timelines in place. There's also a larger impact assessment called the TIA, or a Transport Impact Assessment. For example, in Uganda, it's a regulatory requirement with a regulator called the PDPO, the Personal Data Protection Office. So you have to file a transfer impact assessment if you're moving data cross-border. Tanzania are still doing DPIAs at the moment, but I heard they're in talks, the regulator is in talks to develop a TIA template for when you're doing trans-border personal data transfers or a trans-border flow transfer. In Kenya, there is no TIA requirement, but you could file one, possibly borrow a TIA template from one of the other jurisdictions, and then customize it to what the ODPC or the Kenyan Data Commissioner would require from you. So that's one of the legal obligations. So there's that the other data processor or data controller has to be registered, that you've conducted a DPIA or a TIA, whichever one you decide to do. You could also do both, although that's a lot of work, but that's up to you. And then you have to ensure that then you tick the other data protection requirements.
All right, Louisa, thank you very much for that very comprehensive answer. So we've gone through what are the obligations before and during and after. I think I still have we still have a gap there. Our audience would like to know maybe what happens after you've already transferred the data from one jurisdiction to another. The purpose for transferring that data probably is over. What happens after?
So what happens after? First, it's important in your data protection, whatever data protection agreement you decide to sign, whether the appropriate one rather, whether it's going to be a data processing agreement or a data sharing agreement, that you speak about retention. And then you also speak about deletion of this data when the purpose is done. And then it's also important for you to ask for proof of that deletion. So whether it's a certificate, etc., that would also, you'd also now have to ask whether the data is physical or soft copy. You'd also then, in terms of where this data is stored, if there are any backups, also deal with that in your data sharing or your data processing agreement. In terms of after the data has been transferred, also who has access to it, that's very important, should also be detailed in that agreement. And then also you should also have an eye or keep an eye out for any legislative changes in the recipient country or the country that you're going to be sending the data to, especially if the data protection laws in that country are ripe for change. I think that's what should be done after.
All right. Thank you very much, Louisa. Once again, you also went through the transfer impact assessment, which was to be my next question, but I think you've dealt with that very comprehensively by informing us that Kenya and Tanzania do not yet have a transfer impact assessment template. We only have the data protection impact assessment template, which an organization can conduct prior to the cross-border transfer. And it's only in Uganda that we have the transfer impact assessment. Very good insights on that. Maybe now we can delve into the rights of data subjects during this cross-border transfer. We all know that the paramount stakeholder that we are protecting in this whole data protection space is the data subject. So during this cross-border transfer, what are the rights for the data subject?
All right. Thanks for your question, Charlene. Before I answer, I just want to find out, is Edwin back on the call?
Yes.
All right. Okay.
Edwin,
Charlene, if you wouldn't mind repeating the question for Edwin, and then he can take it.
Okay.
Thanks.
Okay, no worries. Edwin, welcome back to the session. I think you're having a bit of technical issues. Please confirm if you can hear us.
Yes,
Rather,
I can hear you. Yes, I can hear you. Can you hear me now?
Yes, we can hear you. Thank you. All right, so we were discussing the rights of data subjects in cross-border transfer. Could you please take us through what are the rights of data subjects when you're transferring this data from one jurisdiction to another?
Yeah. Thank you. Yeah, I think Luis, she's covered quite a extensive in terms of what is applicable in Tanzania. But there are a couple of things that I'd like as well to highlight. Number one, if you look at the existing person, it requires, first of all, to have a receiving country. You must have an agreement between the data processor. So let's say Credit Info Tanzania is about to transfer data maybe to Kenya, to a particular financial institution. So there are certain prerequisite conditions that need to be met before you can actually do the actual transfer. Number one, of course, like what Luis highlighted, you need a permission from the Data Commission. That one is more of a complicated in a sense that the number of items even they are requiring for you to provide is quite extensive, like what she was explaining. But what I really found it to be interesting, and I would like actually to discuss it a bit, is that there must be an agreement between Tanzania as a country and the receiving country in regarding to the protection of personal data. So let's say there's no such agreement between Tanzania, let's say, for instance, with a country that is outside East African jurisdiction, meaning that they are not part of the East African community. Then there must be a formal agreement between the United Republic of Tanzania and the receiving country for you to be able to transfer. So before even submitting the request to the Data Protection Commissioner, you need to ensure that is in place. And of course, the other party, the other component is that the receiving country must have ratified the international agreement in terms of meeting those minimum standards or minimum requirement for protection of data. That is another caveat as well, which most of the time you're obscured. You can't really precisely be able to tell whether such particular country you're about to transfer, whether such ratification has happened in the past or not. So you need as well to do your due diligence to ensure that such provision is in place before your commencement in terms of request from the Data Commission to get an approval. And in respect to the rights of down, one of them again is another prerequisite condition, despite of the fact that you request approval from the Data Protection Commission. You also need an approval from the Bank of Tanzania, which is our regulator. The regulation covering or governing the Credit Reference Bureau is very restricted in Tanzania. It prohibits completely, without prior approval, you cannot transfer the data, any data, whether it be personal or could be any other information that we are currently hosting at our end, to any jurisdiction outside Tanzania. So you need as well a second approval from the data subject, are well stated, both in a personal data protection, in terms of ensuring that the data that is being transferred will be well secured, in terms of ensuring that the data that is going to be transferred is within the scope of what is permissible under the law. For instance, there are certain information that are prohibited. For instance, medical information of someone, even if, let's say, you are in a hospital today, that is completely prohibited unless otherwise you get an exceptional approval for be able to transfer such information. So there are some caveats, the Central Bank Regulation for Credit Reference Bureau, and as well as the personal data. Biometric information, again, there is a different route if you wanted to transfer those information. Currently, for instance, we as a Credit Reference Bureau, we are not allowed to hold any biometric information in relation to a personal data subject, unless there is a special case whereby you've been granted such access. So even the information that you are currently hosting is just a raw data. It doesn't really take into account like information such as fingerprint and so forth. And also you need as well the purpose of transfer, like what you are indicated earlier on. What happened after the expiration of the particular purpose. So let's say someone has requested information in Kenya and they've already executed such particular task. So what happened after that? The regulation for the data protection, personal data protection, it does provide a leeway in terms of how long such information can be stayed or stored in such a particular jurisdiction. I think it allowed up to 5 years, if I'm not mistaken. There is a retention period, but it was a regulator, the central bank, the Credit Reference Bureau regulation. It actually more than that is about 6 years from the expiration date. So let's say, I think as a component almost similar to what actually Luis has actually alluded earlier on in terms of what is being provided. I mean, what has been provisioned for Kenya and Uganda. So it's similar. but I just wanted to sensitize on those key components. So irrespective of everything, I think is a key issue is that there must be an agreement between the United Republic of Data. Secondly, of having international agreement in terms of protection of personal data. I think those are the two caveats that involved over and above the approval from the data from the personal protection commissioner. Hello.
Yes, we can hear you. Though you're really breaking now, but I think we've gotten most of your answer. Are you done, Edwin?
Yes, I'm done. Yes.
Okay, all right. Quite some interesting differences there between our regulators getting the approval from the Bank of Tanzania and the approval between Tanzania and the other country which you're transferring the data to. Louisa, maybe you could correct me if I'm wrong, but I don't think those conditions are there in Kenya. Maybe once I yeah, they are not. Yeah, I thought so too. So it's a bit stringent on Tanzania's end, as you can hear. Please keep the questions coming in the chat. Thank you very much, Fatima, for the link to join the TPPA WhatsApp group. Members, participants, please, if you would like to join the TPPA WhatsApp group, the link is there. Upendo, I can see your question in the chat. Allow us to address it at the tail end of the webinar during question and answer. All right. So after that comprehensive, discussions from Edwin, maybe I think we've addressed the differences in data protection laws across the region. Maybe we could discuss how financial institutions or regulators, and particularly Bank of Tanzania and the Central Bank of Kenya, being our financial regulators, how can they navigate compliance across multiple jurisdictions? Because we can see that these are different requirements. The regulator for data protection in Kenya has different requirements. The one in Tanzania has different requirements. The financial regulators have different requirements. So how can we navigate this compliance differences across multiple jurisdictions? And maybe if we can have a practical example so that you can just be able to understand how to navigate this complex and rather different requirements in the multiple jurisdictions. Maybe Louisa, you can take that one, or Edwin?
Hello.
Yes, we can hear you.
I think the key, I think the key requisition is harmonization. As I said, before even talk about
Edwin, we are really, is it me, or we are really not getting what Edwin is saying?
Transferring. As I cited earlier on, here in Tanzania, you have two different authorities speaking two different things here. Yeah. Hello?
You're
Yes,
audible,
now
Edwin.
Hello, can you hear?
Please go ahead.
Yes, what I'm trying to highlight is that I think we need the harmonization when it comes to the existing regulations. Yeah? So a good example is that currently in Tanzania, the two regulator, one is the Personal Data Protection Commissioner and another one is the Bank of Tanzania. Can't speak to one another. So as I cited earlier on, you have the central bank that requires you to seek an approval prior transferring of data. And then you have the what is a Personal Data Protection Commission having all those sort of prerequisite conditions for you to be able to conform prior even commencement of transferring of data. So harmonization at a local level has to happen first before even you can speak of cross-border transfer. I think that should be the first priority, in terms of addressing this. And secondly, through the East African community, I think must be a need perhaps to harmonize. If we are talking of having a community whereby freedom of movement of people, but we are continue having restriction when it comes to data transfer. I don't think if it makes sense at all. Some of the caveats that are currently existing in Tanzania, like the prerequisite condition to have an agreement, for instance, between two separate entities. One is sitting in Tanzania, one is sitting in Kenya. To be honest with you, I don't think if anyone will be able to transfer any data in such context environment. So to me, the first point should be localizing some of the laws in terms of harmonizing them at a regulatory level. And secondly, we move to the sovereign level, whereby we must have one single data protection act or provisions that will govern across East Africa. I know that it could be quite a daunting task, far-fetched, but I think that's the way we must be able to address if we really have to have a free flow of information across multiple countries. Even ourselves here in Tanzania, I can tell you we are struggling. It's easy for me today, sitting in Tanzania, to be able to extract or to receive a credit information, an international credit information from a jurisdiction sitting in Europe than even for me to transfer to our neighbor in Kenya or Uganda the same information. The only way we tend to do, or we normally advise some of our clients, is whereby a data subject himself or herself, if it's an entity, that's a separate case as well. You yourself requesting for your own credit report, and you are able actually to cross with respective parties. But for us to be able to send it directly to any entity, could be a bank in Kenya, could be a potential employer, it's very, very difficult with existing regulations. Unless otherwise a data subject sit in the middle and they have to actually to make that request themselves. And again, it's because of the law. That's the only way you can navigate, or we are navigating currently with the Credit Reference Bureau. I have a couple of entities, for instance, in Kenya that are doing digital lending. And there will be, most of them, when we're having conversation with them, they are seeing Tanzania, for instance, as a potential for them to actually extend in credit risk underwriting. But there is one caveat that requires them to have a presence office in Tanzania. And again, it's due to the data transferring part. Because for them, in order to access the bureau, for them, in order to access any credit information in Tanzania, the first key part, as I said earlier on, is that they must be residing in Tanzania. Otherwise, I needed to go to the central bank seeking approval, subsequent result to the personal data protection office to seek an approval on behalf of them, or they need to do it on their own. Because other than that, it's almost impossible. There is no way other way around. They have to set up a physical office in Tanzania. Even in some of the other instances whereby you have, for instance, parent company, they might have obtained a license to operate in Tanzania, maybe on certain business. But because of the absence of a physical office, they have to go via a third party. For instance, they'll appoint a lawyer. We have seen those instances, especially for recruitment agents. So you have a recruitment agent sitting in Kenya, for instance. They wanted it to access to the Tanzania market. But for them, in order to do their due diligence properly, they need maybe certain information, could be a credit report, for instance. For them to be able to get that credit report, they can't get it direct. They have to go via a third party who has a physical presence in Tanzania. So in a typical scenario, what we tend to advise or what we formulate is that there could be maybe a particular law firm in Tanzania. They go via that for them to be able to get such information direct. Because most, in any scenario, most of these institutions that are doing vetting, they do not want to get certain sensitive information from a data subject direct. Of course, there are a couple of issues. There could be someone could tamper with such information. They wanted to get direct from the source. So in order for them to be able to navigate that, they will be going through a third party, appointing a third party, could be a law firm, or could be another entity in Tanzania. And that entity in Tanzania has to have an agreement again with the Credit Reference Bureau for us to be able to provide such information. And then that information will actually be transferred to Kenya. So it's still a gray area. I'm not saying it's actually we cannot navigate, but it's the way we are currently doing. I think it's very, very difficult to actually foster a business environment that is forthcoming to anyone who want to operate across the region. So over to you. That's it for me. Thanks.
All right. Thank you very much, Edwin, for that very elaborative explanation. It seems that the data protection laws in Tanzania are quite restrictive compared to other jurisdictions. Maybe just a follow-up question from the chat that is in relation to what we've just talked about. Irene asks, with the different requirements, do we need some minimum standards, or what would you recommend? I think I can take Irene's question for now because it's quite relating to what we've just spoken. What would you recommend? Minimum standards or what?
I think minimum standard should work much better. If I'm honest with you, yes, minimum standard I'll say should suffice. I don't know in other market. Maybe I can listen to Luis as well from Uganda, and also some of you from Kenya. I don't know over there, but down this side, as I said earlier, it's very, very difficult. And it is something that we have raised a couple of times with the regulator, even ourselves. When you are running a business such as a credit reverse bureau, you are not only providing credit-related information to the local jurisdiction, there are also other parties that are sitting outside Tanzania or outside your borderlines. And subsequently, these parties definitely they'll be interested in terms of getting some information to support them, whether it's a vetting, whether it's underwriting some risky asset, it could be anything. But for you to be able to do that, I think the law need to be supportive. In the current setup, I would say, I'm not saying.
How can we harmonize this these differences with the different requirements? How do we go about it? Minimum standards, or how do we go about it, in your opinion?
All right, thanks for the question, Charlene. If I could kindly ask Frida to just switch off her video. It's just a little distracting for myself. Thank you. So yes, I think in response to Irene's question, and hi Irene, is yes, have minimum standards. So what is set out in the GDPR in terms of cross-border data transfer, or in Tanzania, as referred to as trans-border data flow, is to set up what are called CBRs or BRCs. So binding corporate rules, or they can also be abbreviated the other way as well. So what these are is especially for companies that are operating multi-jurisdictionally or in multiple territorial territories, there are minimal standard data protection-wise that is accepted for you to transfer data cross-border. And it's in the GDPR, it's set out when the corporate binding rules or the binding corporate rules need to be filed with which regulator, and if you need to gain approval from the regulator or not. So it makes things a lot easier, especially for companies or banks that are operating cross-border or cross-jurisdictionally, if we may use that word. Here, it's not really spoken about. So the Kenya Data Protection Act and also the Tanzanian one are silent on that. It's also not clear whether you need to file them with the regulator, and when you do, if you need their approval or not. If you need to tweak them, for example. So let's say you have branches in Uganda, Tanzania, and Kenya. Would you need to file with all three regulators? And would you need all their approvals? And then would you need to change them based off that feedback of the different regulator? So that's something that can be done, but as a minimum standard, have the data processing agreement or data sharing agreement before you start thinking about corporate binding rules or binding corporate rules. Now, for the corporate binding rules to be in place, you need to have minimum things such as you need to understand your data flow, you need to understand your data subjects and their rights in the different countries or territories that they reside. You'd also need to have a clear data map of where all your data sits, which could be quite a task depending on how big your organization is and how much personal data you collect and then process. So that's something that can potentially be looked into. I know, and please don't quote me, I know the webinar is being recorded, that the regulators were in discussions to have a memorandum of understanding or some sort of agreement, so that if, for example, you're a data controller and data processor that has been registered in Kenya, Uganda, or Tanzania, that if you can prove you've been registered and that you have adequate and organizational measures in place, etc., that you may not necessarily have to do the same thing across board, because now what you have to do is tick all the data protection boxes across all the different regulators and different jurisdictions, which, as we've seen, is quite a task. Here in Kenya, the central bank and the ODPC have a bit more harmony between them. So the central bank would regulate central bank matters, and they've left, or they've relegated the regulation of personal data and sensitive personal data to the regulator, so ODPC. So if you were to defer to one, they will take you to the other. So there's a bit more harmonization here. But let's say, for example, you're launching a product that requires CPK approval. You'll have to get the CPK approval first, and then now also tick all the other ODPC boxes, so DPIAs, etc. So it's not so much of a clash. In terms of Edwin's question of transferring data, or rather his response, try and depersonalize the data so that it's not personal data anymore. And for example, like in Kenya, it's a regulatory requirement. If you want to use the personal data for analytics or profiling, you have to obtain data subjects' consent. So ensure that you obtain consent when you need it, especially when it is a legal requirement. There were discussions, especially with the Kenya Bankers Association Data Protection Working Group, and maybe these will reach Tanzania as well. The East African Commission had approached the member banks and the representatives of the different member banks to give input on cross-border data transfer flow regulations, and I use that word loosely, that the EAC is looking into, especially to harmonize cross-border data flow. But as I said, don't quote me on that, because it's still a work in progress. And I know that the regulators communicate quite a lot in terms of the Ugandan, Tanzanian, and the other regulators as well, to try and create more harmony. One of the questions that had been posed to us, ACTFA or AFTCA, the African Continental Free Trade Area, and also now, as I hinted before, the EAC integration can help to harmonize some of this cross-border data transfer, or the trans-border flow as it's referenced in Tanzania. So to help us create a unified regional policies and frameworks, it's a bit of it's not easy, let me say, but let's see what the feedback we get from the regulators. Also, if you can lobby through the TPPA, KPPA, DPGSK, or the other member bodies that you and organizations are a part of, to speak about some of these conversations, then you can get them to the fore, and a bit more harmonization can then take place. Thanks, Charlene.
Thank you very much. Thank you very much, Louisa. I think you've also answered what initiatives that the East African community can and other regional bodies play in harmonizing data governance for financial services across the multiple jurisdictions. Maybe just a last question for discussion before we open up the floor for questions. How are East African banks or fintechs leveraging cloud computing for cross-border data handling, and how are they addressing the regulatory implications? I think I can have answers from both you and Edwin, and then we can open the floor for discussions. Participants, please type your questions in the question box, or once the panelists are done with this last question, you can raise your hand and we can take questions. Thank you.
So I'd like to, please go ahead, Edwin.
Yeah, go first, Louise. Sorry, no problem.
Okay,
Thanks.
it's okay. We're both being polite. Yeah, thank you. So as I said, I'd like to reiterate the disclaimer that was made at the beginning of the webinar. I speak only as Louisa. I do not speak on behalf of the organization that I work for, and none of the opinions that I am giving during this webinar impact what the organization's point of view is. It is Louisa's point of view. So I'll speak generally. In terms of financial institutions and banks, how you can leverage cloud computing or storage on the cloud is one, to ensure that you have good relationships with these cloud service providers. And I wouldn't mention them, all the different acronyms, and if they have presence in your country or not. And ensure that if you're signing what they push for, especially cloud service agreements, or CSAs, as a lot of them call them, that you ensure they have data protection provisions, in addition to you signing a data processing and a data sharing agreement with them. If you tend to ask a lot of the cloud service providers for information on whether the GDPR compliant or KDPA, or the Tanzania Data Protection Act compliant, they will provide you with certificates and give you proof of how they've built in data protection, even to the systems. Also try and push for restricted user access. So simply because you're storing the data on the cloud does ensure that only your organization and its employees, etc., that have access to this information, and that they're also not leveraging this information, for example, for AI to learn off of what your organization is putting in, because it's still intellectual property and it is company data and organizational data and knowledge at the end of the day. Also, it's a lot, some argue that it may be faster to roll out certain products, especially when you're using cloud computing, because then you don't have to think about on-prem or on-premises solutions because everything is being hosted on the cloud. It also may be easier to customize certain products that you also want to launch, even in terms of fintech or mobile banking, etc., or solutions that you want to roll out to ensure that the unbanked are banked. Or solutions that you want to roll out to then speak to a specific problems. For example, if it's for green financing or female empowerment or male empowerment, etc., then it's easier to do that if you're leveraging cloud computing or if you're storing data on the cloud. Also ensure that you have adequate technical and organizational safeguards, as has been said before. That's very, very important. Understand what personal data you're collecting, because at the end of the day, it still belongs to the data subjects. It is not yours or your organization's. Unless it's your personal data, then it does belong to you. And also then ensure that you understand where the primary and secondary servers sit, and then understand you have a proper understanding of what that data flow is. So what does the data look like at rest? What does it look like in transit? What does it look like at the recipient's countries? Is it being manipulated? Put certain data governance checks in place, for example, data validation, that the data you're sending or transmitting from the host country or the country you're in to the recipient country is actually the data that ends up being transmitted, that you're validating the data that it's correct, etc. In addition to now ticking, not just data protection, so now you're doing larger data governance checks, so even in terms of migration, etc. And that's how I think they can leverage cloud computing.
All right, thank you. Edwin, anything to add?
Yes, yeah, thank you. Very interesting. The central bank came with what they call as guidelines for cloud computing. And specifically, actually, they are targeting fintechs and, of course, any financial service provider who has a digital footprint in terms of their channels. So under this particular guideline, they've provided two key components, and they've defined them as follows. One of them they call as a mission critical system and the non-mission critical system. And depends on where you are seeking the approval. So let's say it's a fintech. You are currently doing payment, cross-border payments. So the central bank can only allow you on non-critical, non-critical mission system. They are defined the critical mission system as a system that is required for the survival of the business. So without that, you cannot survive. So if you are a digital lender, for instance, meaning that could be your core banking sort of system, meaning that where you are storing your customer data, could be deposit, could be credit that has been dispersed, could be any information that is critical to the survival of your business. So that is being deemed as a critical mission system. And under that, they are still prohibiting when it comes to cloud computing. They wanted everything to be physical, on the ground, on a certain premises, data centers that are located across the country. But when it comes to the non-critical, this is where they are providing a leeway a bit, I would say, because here they are referring to activities such as marketing, sales activity, lead generation, all of those sort of things. So they do allow that. You can actually do cloud computing. And of course, you need to seek approval from them. So if you look at it from the context of what I've just highlighted, It's very difficult again. And I would like as well to put a disclaimer like what Luis was actually alluded earlier on, that again, this is my personal opinion. It's very difficult considering the cost of the hardware in terms of putting up the infrastructure on the ground. And of course, the cost of supporting such infrastructure, upgrading and all of that. So it's becoming a burden to quite a number of fintech. So what the central bank again did, this again is, I think last year, they came up with what they call as a sandbox, whereby they say, okay, fine. If you have any particular less idea or particular solution, innovative solution, and you like actually for us to give you a provision for that, we allow you to apply for a sandbox avenue, whereby we'll give you a period of 12 months, so to speak, where you can demonstrate your use case. And after that, we'll come and sit down with you, try to see on what leverage we can actually provide to you. So let's say you've done your 12 months trial period, and you have provided quite a substantial evidence that the use case is valid, there's a demand, and of course you are also addressing the issue relating could be to financial inclusion or any sort of KPIs that you had agreed with the central bank. Then yes, in such avenue, the central bank could allow you your critical mission system to be deployed on a cloud. So it's still a gray area. And again, this is based on my opinion, I say, in terms of how the fintech can navigate when it comes to what we are just discussing, either be cross-border transferring or storing and processing of data in a cloud. So it's a bit tricky for Tanzania, I'll say. And this is what goes back to what I said earlier in terms of having first to localize, to harmonize some of these local laws to ensure that they are providing a leeway that should foster innovation and of course provide an avenue for for some of our business here, especially fintechs or startups, to have a competitive edge. It's very difficult for some of them actually to compete with the likes even fintechs that are coming from Kenya. I'm not saying the data part is one of the key hurdle, but there are a couple of issues which are not part of this discussion. But I think is one of the items that need to be actually discussed at a regulatory level. Over to you. Yeah, thank you.
All right. Thank you very much, Edwin and Louisa, for those insights. In the interest of time, I'd probably take questions. The first one being, all right, are there provisions or exceptions for cross-border for countries with adequate laws in the Tanzania Privacy Act? Maybe Edwin, you can take this one, whether there are provisions or exemptions for cross-border for countries with adequate laws in your Privacy Act.
Yeah, thank you. I think this question comes from TC. TC, yes, yeah, thank you, TC. So yes, there are certain leeways that are there, but the challenge depends as well on which segment or which sector or which subsector of Tanzania economy you're operating. And I'm saying this because it's important. So let's say you are regulated by the central bank. That means you are falling under the FSP mandate as financial service providers. You might qualify under the data protection, personal data protection commissioner in terms of meeting some of those prerequisites. But then there are certain caveats as I pointed out, for instance, from the main regulator. Now you are regulated as a central bank. You might fall short a bit on that one. So for instance, the data protection does not provide clear guidelines in terms of cloud computing. Yes, it says that you cannot transfer the data without having prior approval from the commissioner. You are required to have all those prerequisites I mentioned earlier, like ensuring that the receiving country has an agreement with Tanzania, and so forth. But then you need as well to subject yourself to your own regulator. So in this case, could be the central bank, meaning that there are certain components you need to conform to. So let's speak of hosting. Hosting meaning that storage of your data. So the guideline as I pointed out earlier on is very clear. When it comes to the critical missions, we are speaking of deposit data, payment data, credit data, that is to the survival of your business, then there is a bit of, you need to seek exception approval from the central bank, I would say. But for the non-critical, I think that one, it could be actually an easy route if you really wanted to navigate through that, for you to have it hosted maybe in a cloud. So it depends. It depends on where you're operating, what sort of business you operate. So that is for the financial. So what if you're operating maybe in a different jurisdiction, let's say in the food industry? I don't know much about that angle, but again, there could be as well some other restriction from your food, from your food and the beverage regulatory authority, for instance, or you're operating in the energy sector. You could also be subjected to the energy authority. So that's why I was insisting earlier on that in Tanzania, it's a bit, I found it to be a bit tight compared to what I've seen in other countries. But again, to answer to your question, are there exceptions? Yes, depend on the sector that you're operating in.
All right, Edwin, thank you very much. I think actually you answered both TC's question and Lee Opez's question. So Louisa, maybe you can answer the next question, which is if you could kindly address the situation of subsidiaries operating in different countries, such as Tanzania and Kenya, that share a common parent company and therefore